G'day, fools, and welcome to Motley Fool Stock of the Month, the one time of the month where we give you free a Motley Fool by recommendation. Yes, sounds a bit crazy, but that's what we're doing. Why? Okay, it's probably good for business. If you like what we're doing, if you like what we're saying, if you get a bit of free content, you maybe think, hey, it's worth signing up. That's great. We'd love you to do that. If not, that's okay too, because we're really just here to try and help other Australians learn how to invest a little bit better, share a bit of our process, a bit of the way we think about stocks. If it helps you with your investing, then mission accomplished. If you join the services, that's great too, but that's not what we're here. Just it's free content. Motley Fool YouTube channel. If you like it, by the way, do me a favor, hit the like button because it's good for me. It's good for Mitch. I'll introduce in a second. It's also good to help other people find the channel. And if you are enjoying it, if you do get value from it, subscribing and hitting the notification bell, you know that by now. You're old hands at YouTube. Helps you find it. Just a reminder, please do that if it is something you want to see more of. By the way, speaking of distractions, raining on my tin roof right now. So if that's annoying, or at least maybe some white noise in the background, that's what's going on here in my office. By the way, if you saw Wednesday's YouTube, you'll also know I have a new puppy, and Diesel may or may not make an appearance depending on whether he's well behaved while I'm talking to Mitch. So stand by for that one. If not, go back and have a look at Wednesday's video, but only after we finished here, because we've got some important stuff to talk about. A Motley Fool by recommendation. Firstly, Mitchell Lawler, g'day.
G'day, Scott. How's it going?
Mate, I'm very, very well. I'd say there's a scratch under my chin here where Diesel got me in the last video. So there you go. You can see that scar inflicted on Wednesday's video. But otherwise, mate, I'm exceptionally well. It's always good to have a puppy. And it's good to be talking to you about Super Retail. Now, the code is SUL for those following along at home. But that's enough description from me. Over to you. Tell our viewers what Super Retail is and what it does.
Super Retail is a bit of where it came from. So it started in 1972 by Reg and Hazel Rowe. It actually started as a like all great businesses out of a garage in Brisbane, and it was a mail order business. So they just put out a catalog and people could phone in or send a back in the day of post, people sending letters, send in an order for whatever they would like, and then post the order to them. So over the years, that has obviously grown out to a business that is much larger and encompasses a lot more pieces. And so those pieces are four lifestyle consumer brands that we've all probably come across before. The main one is Supercheap Auto, which is a automotive business. You can get your car parts, your battery, your windscreen wipers, all that. The other business is Rebel, another one, sporting goods and apparel, very popular. BCF, boating, camping and fishing. It's probably not the weather for it at your place at the moment, Scott, but if you're looking to wet a line, BCF is a place to go for a lot of people that are into the outdoors. And also Macpac, it's their more recent addition, again, outdoor apparel and equipment. So those four brands all housed under the one Super Retail. And this is a business that now is generating in the latest financial year over $4 billion in revenue. So it is a colossal business. And what really is quite amazing is, even though it's retail and mostly reselling, products from another party, it's still got quite exceptional margins. I think it was about 6% in the latest financial year. So it's doing all this at phenomenal margins. And I think that's a byproduct of a lot of the investment that it's done over the years through customer loyalty, through its loyalty program, 12.5 million active loyalty members on its books now at this point. It's building its online segment as well. There's about 13% of total sales that are through the online channel. So it's an omni-channel retail, as the term is, the term for that. Bit of physical, bit of online as well. And it's across 780 stores. So there's a good chance that wherever you are in Australia, you will be able to find at least one of these brands somewhere in your local, if not in a nearby town.
I reckon I've shopped in I think at least 3 of those 4 over the past 12 months. Just I'm a shareholder, by the way, for those who are keeping score at home. We always disclose that. Why? Because we figure it's fair for you to know that. It shouldn't influence our analysis, but maybe it does, subconsciously or otherwise. So the best thing we can do is disclose that, let you know, so you can make those decisions. Yeah, I reckon I've shopped in 3 of the 4, mate, including buy a footy for my son at Rebel only a couple of months ago. So yes, I'm certainly adding to that company's top and bottom lines. Let's talk to you about the investment case, right? The business is one thing, and we say regularly, very hard for a bad business to be a good investment. You can kind of find a cigar butt occasionally. Also, by the best businesses can still be terrible investments if they're too expensive. So our job is to say, right, here is the business. Here is the investment case. Do they match up, or do we wait and see? Now, in this case, we already know this is a buy recommendation, so we've given away that detail. So I will ask you, Mitch, rather than, and our Stocks in Focus, by the way, middle of the week, we do every third Wednesday, we do a pros and cons, and we kind of say, look, here's the list. With the stock of the month, we're saying we like it. We think it's a buy. We'll tell you why. We also will, of course, always tell you what the risks are. So let's do the format first, Mitch. Let's talk about why we like Super Retail Group.
Yeah, the main thing that stands out to me is in this retail landscape of, the Amazons of the world coming to Australian shores and making it ever more difficult to maintain reasonable margins in the retail space. Super retail, I think, particularly in the Supercheap Auto segment, has a unique differentiator from a lot of online competitors. And I think that stands with the fitment services, at least in Supercheap Auto, where if you can get next day or same day delivery, that's not quite, same day install. Amazon can't install your wiper blades for you. And so there's a lot of these little touch points that help build the customer relationship through the brands of Super Retail that can't quite be replicated by the pure online retail competitors. And then secondly, I would say the diversity and defensiveness of some of the businesses as well. So having 4 brands allows it to balance itself out through the cyclicality of each industry. I think Supercheap Auto, again, is a great way of a great defensive mechanism for the business. So there's this concept of demand elasticity where, depending on the price and the depth of consumers' pocket, how likely they are to go out and spend depending on, the price changes. And, we all know that travel, there's a lot of necessity in that. If you have to go to a doctor's appointment, drop your kids at school, there is discretionary, travel that you don't need to do for going on a holiday, but there's a lot of travel that's necessary. And so even in economic slowdowns, that business has a degree of insulation from the slowdown. And that allows Super Retail to sort of invest through the cycle, whereas other competitors that maybe aren't as diversified across multiple brands wouldn't be able to do. So it's actually getting on the front foot where its competitors would actually have to taper back on investment. It can continue to invest. And then thirdly, I would say the automation omni-channel opportunity. So Scott, you and I were actually talking about this yesterday about automation in retail and how important it will be going forward. So I think in the online space of retail, there's this concept that maybe online is a silver bullet. If you have online sales, that it's by default you're a better business. I would put forward that maybe it's the way in which you carry out those online sales. So the way, the extent of automation that you have through those. If you're just getting an order from a website and then fulfilling it no differently to how you may fulfill that order in a store, it probably won't actually benefit the margins per se. And that's where Super Retail has been investing in creating a new distribution centre in Victoria. In the second half of FY26, they will switch on the automation capabilities, and that will again help their customer satisfaction ratings, quicker fulfillment times, lower errors with those online orders. So I think that sets it apart and probably puts it more on par with the customer experience that maybe you would get through an Amazon. And then I suppose to the valuation fundamental perspective, we're getting this quality business that has these upsides that I've just described at a reasonably good valuation. So I think the last time I checked, it was about 17 times earnings. That is, not a tall order for a quality business that has shown a track record of expansion, growing its store network over time, and especially in this sort of market where the market's at all-time highs. There's a lot of businesses that, yes, maybe are quality, but there's a price for every business. And even if it is quality, paying too much for that business doesn't always lead to a good investment. I think Super Retail is in the boat where it's still at a valuation where it's a good business at a good price.
Nice, mate. Really nice summary too, and a great reminder of how to think about investing in that context, particularly, as you say, all the time, but also when markets are high. I hate the saying it's a stock picker's market because it kind of always is, and it's a bit self-serving, all those kind of things. But let's just say when the markets are bombed out, you can buy most things and make money. When markets are at or near all-time highs, you're basically a little bit more picky. Things will go higher. They always do, at least on a total market level. But being selective and finding great businesses at good prices, I think is a good way to go. Let's, though, do what we said we would do, which let's share some of those risks. So yes, we think it's a buy, but what are the things we're mindful of, aware of, want to make sure our viewers understand about Super Retail that maybe present some downside risk or maybe just some possibility that things don't work out as well as we might have hoped?
Yeah, a big one that has come across in the latest full year result was stock loss or theft. So Super Retail has had a big issue with theft. I mean, it's across the board in retail, and but it certainly impacted their financial performance. And I think on the waterfall diagram of their earnings margins, it actually the impact of stock loss completely offset the benefit of their network, their store network expansion. So that's sort of, to put into context the scale of this impact, they're investing a huge amount of capital in refurbing stores and opening new stores. That benefit from all those new stores and the new fit outs was offset by the stock loss. So it's a big impact. The problem is that there's only so much that a retailer can do. Super Retail has put in a lot of countermeasures with different blockades in the stores to prevent people getting out if they're trying to steal any stock. But there's only so much that can be done. The issue then moves towards, well, what can they get done with maybe working with state government? The issue seems to be concentrated to Victoria and a small number of rebel stores in Victoria. So it is partly isolated, but the risk is that if Super Retail is already at the point where they've done as much as they can really within their control, it is a open-ended question as to how long and how big this impact could perpetuate without some changes being made. Secondly, I'd say rising online competition. I touched on this earlier, but the likes of Amazon, there are other competitors out there, but if you know what product you want, if you know the make and model of your car, if you know the style of fishing rod that you want to pick up, there's nothing stopping people from buying that online these days. And so it has probably lowered the bar to entry for a lot of these businesses and made it harder for Super Retail to differentiate. I do think that there are steps being taken by the business to negate some of that with its loyalty programs to create recurring business. I think it's around almost 80% if I'm correct with the level of loyalty customers as part of their sales now. So there's a high affinity of the loyalty program to buy again, but it's certainly a risk that they'll have to continue to monitor on an ongoing basis. And then lastly, I'd say it'd be remiss of me not to mention some of the fallout that's happened in recent months with management. So allegedly put all the legal statements up on screen. But yeah, so there was a bit of a scandal with the former CEO, and new information came to the surface, I think in October, and the board moved to terminate the former CEO Anthony Herity following those allegations. So the good thing is that a lot of the performance rights for him had been clawed back, and a new CEO has been put in place. So the former head of BCF, Paul Bradshaw, which has had a great track record for success since he took over managing BCF, tripling its profits, I think, since 2019. So he's got a fantastic record in terms of growing the business and having that consistency too of finding someone internally to put in place of the head job of Super Retail. I think that's a great thing. But there is some risk of maybe some legacy issues, some overhang with that. I think the board has put in some good measures and some good governance to mitigate that. But it's something to be mindful of.
Nice summary, mate. Thank you. You're giving us the pros and the cons, and we think the pros do outweigh the cons. Wrap it up for me. Give me the 30 or 60-second elevator pitch. We can't give personal advice. This is only general advice. But why should our viewers consider buying shares in Super Retail?
Super Retail is a diversified retail business, so across automotive, sports, and outdoor leisure, making it defensive. It stands up against its peers, and the vast loyal customer base, the growing omni-channel capabilities, and a clean balance sheet as well, in a net cash position, sets it apart from a lot of its retail peers. At the current valuation, it's not asking too much. It's not a tall order. I think it's a reasonable valuation. A pretty good dividend yield as well. If you take into account the special dividend that was paid, up around 6%. That may not continue going forward, but even without the special, brings it to around 4% dividend yield. So I think it's a really good pocket for investors that are looking for a quality business that is income producing as well at a good price.
Beautifully done, Mitchell Lawler. Thank you for sharing your thoughts on Super Retail. Again, the code SUL. General advice only, but we think it's a buy, and we're sharing it with you on YouTube here for free. If you liked it, do us those things. Hit like for me, hit the subscribe button, and hit the notification bell. Thanks for watching. Until next time, full on.